Hey, this is Jim Savoldi, developer of the behavioral analysis and markets model. It's Sunday, June 20th, about 9:21 p.m. here in San Francisco. Want to do a quick review for the public, a couple markets that are in fast market moves and markets that have retest levels that indicate either flash crash type setups or stair step crash type setups. Since 2008, we learned that the market was only going to be allowed to decline about 7% at a time as far as the stock indices go, which is fine. None of us want any systemic risk spillovers into the real economy and global economy. That's not what any of us want. But at the end of the day, it is my job to share the forecasts that the model's making, the predictions that the model's making. So that's what I'm doing here. Always looking out for people who have been caught on the wrong side of the market in the past. And although I am not a financial advisor and I do not provide financial advice, I'm more than happy to share my model's predictions. This is 30 plus years worth of work. And these models are highly accurate, especially when human emotion is high and when markets make fast market moves. Some of the same environments where some of the other models might not be quite as effective, especially valuation models and fundamentals and things that don't focus specifically on human emotion, sort of liquidity driven margin call type events. I think those are environments where this model has tended to outperform other models in the past, and I think it will again in this cycle that we're looking at here. So this is our uptrend off of the pandemic low. You can see the Dow dancing on that uptrend. This is a fast market retest level, 32,600. This is another one at 31,325. We've got a 27,700, 26,420, and then this 19,300 number that was left behind. The reason these are left behind is usually because of intervention and humor and human interference in markets that would otherwise take their time to figure out discovery between buyers and sellers, valuations that are fair, as opposed to sort of the highly leveraged, algo-driven, news flow-driven, controlled by forces outside of the core market participants. Those types of markets tend to leave behind sort of this pay me now or pay me later setup that the model spots. So anyway, these are similar setups to what we had when we had the flash crashes of the past. These are also sort of stair-step crash type setups. You can see these zones of weakness that the model's predicting. You can see all of these levels laid out. And there are very few what I call vibration levels in between. Vibration levels are simply once price contacts a retest level, then you typically get vibration swings above and below. Those are left behind, and if we haven't seen the proper number of swings above and below the contact points, then I extend that vibration level into the future and assume that it will provide some shock absorber on the way down for the market. In some of the flash crashes, we've gone straight through multiple levels. I mean, this is a sort of a wobble level here. So it's possible that we can move all the way down to this 26,420 number very, very quickly. This level here is more a probably August, September type number if we're assuming that the market's going to track the model. So anyway, it's a very bearish setup, obviously. So far, tracking has been excellent. You can see the trajectory on the first leg down. I always measure trajectory on the first leg down and assume that when consolidation has run its course, that your trajectories on the following legs are going to be the same trajectory or even more severe. So you can sort of see that this easily allows for contact on these retest levels into all of these different zones of weakness. There's no question that the trajectory is proper, the velocity is proper, everything else allows for this type of a move. So the bonds are in the opposite type of a setup. There's a very bullish window here out into July, the same period where the stock market looks so negative. My dollar model's been tracking perfectly here last week into this upside acceleration zone. Same thing with the gold model with this collapse into the zone of weakness. Silver model with the collapse into the zone of weakness. Crude oil looks stubborn here, but the crude oil model is expecting a retest of the 26.50 level to begin with, and then we have retests down at the $20.50 level. This is my most highly accurate model over the past 7 years. It's the most profitable and most accurate. This is the same model that predicted in the summer of 2008 a crash at the $36 level over the next 6 months. The market did crash at the $36 level, but it made it to that level within 3 months instead of 6 months. And that was from up in the high 130s, low 140s. So it was a move that was, in retrospect, called a black swan by some people, by other people who predicted the mortgage market-led debacle, housing market-led debacle. They didn't consider it a black swan. So I don't know about all the definitions, but I can just tell you this has been a highly accurate model. And so although it seems odd that we'd move back down to the $20.50 level in crude oil over the next couple months here, I'm not going to dismiss it. Bitcoin's tracking really nicely. You can see we've attacked this 34,200 retest level directly into the zone of weakness here. I'm not going to share all of the details as far as zones of weakness because these are markets that I cover with the subscription, with the membership site. I will tell you that we do have this $18,100 retest level. I list this as a at some point. I have a pretty good idea when I think that level can be met as far as a time and price collision. You'll see for the time being, it placed it out here into July. We'll see if that turns out to be accurate, but I always list these as at some point until I start to see the trajectories and until I start to see the velocity characteristics of the move and determine whether or not there are new zones of strength or weakness that are generated. If there's new zones of strength that fight against the existing zones of weakness, then we can have just a broad, sort of sloppy range. I can tell you this is an incomplete bottoming count right here, even down to some of my lower time fractal, smaller degree models. So confident that we will see a break of that level. And then as far as whether or not it would be a chopping slow move underneath this May low or an acceleration move, this is what provides that answer for me at least. And we'll see if Bitcoin tracks the behavioral analysis of markets model or not, but that is a number that we have on the board here. So all in all, things look it doesn't look like a sleepy summer. It looks like an eventful summer. As far as the fundamentals that are driving some of these moves, in my mind, we have a lot of people on the same side of the boat into that June high, and the markets are just so highly leveraged, and there's so many complex derivatives products out there right now that it doesn't take much to sort of set off a cascade of events. So that's it. Hope everybody's doing well. Good luck with your trading or investing. Again, I'm not a financial advisor, and none of this was meant as financial advice. I'm simply sharing with the public some of the information generated by my behavioral analysis model. Good luck.